So that leads in perfectly to our next panel, which is called The Role of Digital Identity Platforms in Digital Financial Inclusion. So this will be moderated by Kanwal Singh, who will introduce the speakers. Please, Kanwal, from the Bill and Melinda Gates Foundation.
Thank you, Julia. And Nehal, when a professor says that was an interesting talk, I would have a follow-up conversation after that. Thank you for giving me the opportunity to moderate this great panel. I would like to invite Jackie O'Neill from Microsoft and Ramesh Narayanan from MOSIP. And we'll get plenty of time to talk. Please have a seat. And Mr. Fahad Salek from Morocco. Thank you. And Al Shifra from Ethiopia. Thank you. All right, so before we get started, I noticed, Julia, we have 5 extra minutes, so we can have some fun, right? Okay. Because this is the close to 3 o'clock panel, people have just had very good food. They were mentally nourished by the great poster session up above, and then this great talk about how many 6 billion transactions a month from NPCI, and then comes a panel. If I was there, I would be snoozing right now. So this is a kind of a hard job, so I'll try to keep it lively and entertaining. So today we're going to be talking about the role of digital ID in financial inclusion. But I guess before we take the viewpoints, we need to get to know our panel a little better. So what I would request the panelists to do is to introduce yourself, briefly say what you do now, and add what did you want to do when you were a kid. So the audience knows, like, you know, who's where they want to be and who ended up where they are. Jackie, let's start with you.
So I'm Jackie O'Neill. I run the Microsoft research in Africa. And I wanted to be a pilot when I was a kid, but I was told that my legs were not going to be long enough. But what they actually meant was that women couldn't become pilots.
Oh. Ramesh?
Hi, Ramesh Narayanan. I head technology.
Mike.
Hi, I'm Ramesh Narayanan. I head technology for MOSIP. I'm the CTO and I'm in charge of product development and the roadmap of the identity platform at MOSIP. As a child, I think I wanted to be too many things, and that's why I think I ended up being an engineer.
Good. Couldn't decide. Fahad?
Thank you so much. My name is Fahad. I'm coming from Morocco, and I am working at the Digital Development Agency, which is a governmental agency working on implementing the strategy of the states in terms of digital. So we're working mainly on 3 areas, conceiving programs on e-government, digital transformation of the public administration, and the private sector, which is conceiving programs to help the SMEs in order to help them into their digital transformation journey. And the third part is programs that are related to citizens in general. And if you can remind me the second question, please.
What did you want to be when you were a kid?
When you were a kid? When I were a kid, my parents wanted me to be a pharmacy, but as a child, I always wanted to be a CEO of a big technology firm. Thank you.
Thank you, Fahad. Al?
All right, my name is Al Shifra. I'm from Ethiopia, so I'm the lead for the Ethiopian Digital ID. I stress not national ID, advisory council. So I support the overall Digital ID program in Ethiopia, providing advisory services on a range of topics. When I was a child, I actually don't remember anymore. I think it took me a while to figure out what I wanted to do. I thought I was going to be a lawyer at one point, maybe a journalist, and I ended up in information systems and technology.
Cool. Thank you, Al. And just to complete the loop, when I was a kid, I wanted to be a lawyer. What I do now is I work in the Bill and Melinda Gates Foundation, financial services for the poor team. And I have been many things. I have been a journalist. I have made molecules, I've been a chemist, I have been a physicist, I've been a device engineer. Basically, that goes to show that I don't really know what I want to be. And so I think I ended up exactly where I need to be. So, and the lawyer part you will see, not as a good lawyer we saw this morning, now you'll see how a bad lawyer would do it. So to get things started, this panel I think is going to be pretty interesting as we had a great lunch conversation. So I'm gonna change the order of our question a little bit. Jackie, let's start with you. So you spent many years in India studying financial inclusion, looking at cash, mobile money, digital payment infrastructures. And I don't want to give away anything that you're going to talk in your talk later. But now you lead Microsoft Africa Research Institute. So from your perspective, what role did digital identity play in India for financial inclusion? And you can define financial inclusion any way you like. And what are some of the innovations and new risks that you observe that African countries might need to adopt or address? Big
Thanks.
question. I'll have you to repeat any parts of it if you want.
Okay, I'll start and then we'll see where we get. So, can you hear me if I don't lean into the microphone? So, I'm going to lay my cards on the table. I'm going to be quite a little bit controversial, maybe. I don't think there's any relationship between digital ID and financial inclusion. In fact, I don't think there's any relationship between financial inclusion and digital payments. So, maybe to give you some reasons why. So financial inclusion really is about being able to partake in the financial system, having enough money to get by, and to be able to live. So financial inclusion, if we want to address that, we really need to think about how do we enable people to have enough money. So you can pay by cash or you can pay digitally, but if you don't have any money, it doesn't matter which way you're going to pay. So this is one of the really important things, and I think we tend to forget about that. It's not that I'm anti-technology, of course not. I run the Microsoft Research Center, so I am a technologist. But it's really important for us to think about what are we trying to achieve when we're trying to achieve financial inclusion. And the focus on digital money, for example, and digital payments tends to take us down the wrong route. And particularly important, I think, is when we think about digital identity, and particularly having a single digital identity like Aadhaar, the risks are much, much greater than the benefits of that digital identity. If you think about how we operate now, we all have lots of identities and they're not necessarily very well connected. So your identity in the healthcare system might be a bit different to your identity in the bank, which is different from your mobile payment system. You know, I live in Kenya now, so I love M-Pesa. It's fantastic, although I do wish we had the UPI model of not having any transaction costs. that would be fantastic. So, but my identity there is very different from my identity on the healthcare system. And I think it's of benefit to citizens to have a set of different identities so you can have some privacy, some protection, and some anonymity. The challenge when you have a single identity which is linked to everything is, what's the government going to do with that? Do you trust your government? You might trust your government now, but governments change. I mean, look what's happened with, and laws change as well. So that's the other thing. People say, well, they just do operate within the law. But if you look what happened in the US quite recently, a whole set of laws affecting women's lives changed. And suddenly women all over the country were deleting period tracking apps because that could potentially open them up to prosecution if their local state government somehow thought they got rid of a child. You have in the UK, like the current government, I would not want them to have anything to do with my identity, let alone a visibility onto every aspect of my life. And our civil rights and what the government wants, they have some relation, but they're not always as connected as you would like. And so my fear with the idea of having a single digital identity is it opens people up to persecution, and that persecution can change. You might have a great government now, or you might be in the majority group now, or you might be a woman and the government might support women's rights, and then the government changes and the government no longer supports those things. So that's my fear.
Oh, thank you, Jackie. And it is so refreshing to have a counter view on the same panel, and I think that makes for a much more enriching discussion. Like for example, Jackie, the definition of financial inclusion, I think we should settle down on that a little bit, because you said it's having access to finance and having enough money to spend. But I think in the strictest of definition, we should be able to separate access from having money, because that's not an inclusion matter. But with that, I would love to pose this question to Ramesh. Ramesh, you are the CTO of MOSIP, an open source ID platform, and you are now working with many countries in Africa and Southeast Asia. And the countries come to you with use cases on how to use MOSIP. What do you think are some of the use cases that the countries are really going after? And what is your view on what role does digital ID play in financial inclusion? And if you would like to respond to any of the views of Jackie, please feel welcome to all the panelists.
Sure. Yep, thank you. I think just to make sure that everybody is awake, I'll start with the word Tom Cruise. Okay.
You got my attention.
Right. So I think it's been almost a couple of decades since the movie Minority Report where Tom Cruise stars, and Steven Spielberg, who's one of like the Jules Verne kind of guys who look into the future and shoot movies. Right. So there we saw what technology can enable, right? It's been like a dream. Somebody walks into a mall, their iris gets scanned, and then there's an apparition which says, "Welcome, Mr. So-and-so, would you like to buy this?" or something like that, right? So that's the kind of experience, right? So see, this digital dream is something that countries now have. If you look at it, every country has a very nice, well-articulated digital transformation roadmap where they see how the power of digital technology can be leveraged to use, right? But beyond all the dreams, when we start going to the implementation, I see healthcare, agriculture, social protection. These are the basic things that actually people are looking at the ground level, because that's the imperative. People want to be able to respond to crises and emergencies much faster. And they know that the pathway to that is being digital, right? And whenever you have any kind of digital technology to work, just like any kind of physical technology or physical process or solution, trust is the key, right? And trusting people who are participating in the digital transactions, that's where digital identity actually comes in. And that's why I think most people start off with a digital ID as one of the first initiatives as part of the digital journey that they are on. And to address Jackie's concern, at MOSIP, when we develop software, we start from her viewpoint, right? How do we protect the user? How do we protect the citizen? We don't want our software to be used by somebody else, because we are not going to run it. It's going to be run by respective countries. But we don't even want it to be used to, instead of creating positive impact, to actually abuse users, right? So we don't want that. So that's why we think about it, how to be inclusive, how to protect the user. And I think that's what we are trying to break into the design and the thought process. But having said that, technology is not the only answer. There have to be processes, regulation, checks and balances, all of these in place along with technology. But technology also should be amenable to do this, right? And that's how we approach this. And I believe that the goals that people have taken, the right kind of use cases, can be enabled by digital technologies. Digital ID can lower the friction in access to services. A lot of times services are not delivered because either it's too expensive or too difficult to access, or not trustworthy, right? So people walk away from these options. So we have to make it trustworthy, we have to make it easy and low cost. And I think digital ID done right can go a long way in that.
Cool. Thank you, Ramesh. And now I think we should get in a country perspective. So Fahad, Morocco is embarking on an ambitious digital ID program. I believe MOSIP is, they're going the digital public goods route. What are your thoughts on digital ID and what role it might be able to play with financial inclusion, or whichever definition of it you like, Jackie's or Ramesh's?
Okay, thank you so much, Mr. Singh. So first of all, I would like to talk about the identity in its traditional term and come back later to talk about the digital identity and its relationship with financial inclusion. First, I don't want to define what is financial inclusion, but start from its traditional and standard definition and say that what I can say is it is very important to countries as it is considered as a critical trigger to economic growth and poverty reduction, and it is, as many specialists think, considered as directly responsible for at least 7 of the Sustainable Development Goals out of 17. So no doubt about the importance and the vitality of this financial inclusion. And the foundation and the most basic steps toward this financial inclusion is the ability of citizens and people to have a banking account or a transaction account. And among the obstacles or barriers throughout this is the ability of people to prove their identity. Pretty logical, because financial service providers want to open a banking account unless they are sure who their customers are going to be. This is the first thing. And according to a global index led by the World Bank in 2017, they found that at least 26% of the unbanked people in the low-income countries, they stated that the lack of documentation is the main barrier throughout creating a banking account. So this has been somehow mitigated by opening the market to non-banking players. And this would only be successful if those non-banking players can have lower and different documentation requirements. And beyond access to documentation, the high cost incurred in validating those documents constrains financial service providers from extending their financial access to those citizens. So when you have an identity that could be authenticated automatically, so leveraging technology, this will reduce costs for those financial service providers, and this will allow the use of agents and reduce distances. Beyond of that, digital identity is actually increasingly being important to the effectiveness of technology innovations, such as open banking, such as marketplace lending. And those are considered the critical triggers for this financial inclusion, as it allows those citizens to share in a trusted manner their banking data with their trusted third parties in order to make better decisions of their banking data. And this is so important. Another point, and I will, I think I talked too much, and I will give you back the, another point is that, yes, as countries and governments are delivering more and more public services through digital networks and through digital platforms, I think that citizens, they could, which means that citizens should increasingly attain those services. I'm sorry. I'm so sorry. I lost my
That's okay, Father.
my speech.
Yeah. The point you made is actually very well taken, because you cited the World Bank study that many people cite a lack of documentation
Yes.
as an inability to be able to open an account. And with that, if you wanted to add more, or I could ask Al to chime in on Ethiopia's view on that. Should I give you a moment? Okay. So Al.
Yes, I'm sorry.
Yeah, I'll move on to Al for now while you can.
Okay,
and
do
we
you
can
want
come
me
back
to
you.
talk about the Moroccan experience now, or let's
We
just
can come back to you.
Okay.
Yeah. Yeah. So Al, Fahad made an important point.
Sure.
People cite a lack of documents for not being able to open an account. And
Right.
I was on, so you are the lead advisor for Ethiopia's digital ID system, which is called FIDA, and which I believe means value or benefit.
Right.
And I was on FIDA's website last night, and eKYC is listed as one of the prominent use cases, which is the ability to do the know your customer check by financial institutions. So what do you think, as Ethiopia embarks on this digital ID program, what will be the impact on financial inclusion? And the second thing was, Ethiopia made a choice also, just like Morocco, to go the digital public goods route. Could you also comment on that?
Sure, I can do that. Yeah, so allow me to respond to Jackie's curveball here. Basically, there's definitely no question whatsoever that if you don't have money, you don't have money. We all understand that, and it's a much broader economic issue to make sure that everybody in the country has enough resources to participate and be active in the community. So I just want to say two things. Living in Africa, I think most of us obviously do here, right? So we're dealing with high level of inflations, right? So we want to make sure that people have access to financial services. So the money that they have in their pocket, the money that they have hiding behind the pillow is actually earning basic interest, right? So it's such a major issue. The other point I want to stress so much is as we go digital, and even in Ethiopia is sort of lagging in terms of going digital, but in the last 2 years, we've seen such a spike in the introduction of digital services. So you want to go get an Uber type of service, you can pay by credit, you want to get services online and so on. In those cases, you need to have a bank account to be able to utilize those services. And that happens in both directions. One is when you want to use a service, and secondly, when you want to provide a service. So being able to receive money digitally is actually a key important factor in being able to participate in the country's economy. So it's such a critical requirement. So what are the limitations that we're seeing in Ethiopia in terms of financial inclusion? The issue has to do with documentation, so I'm so glad you guys raised that. So what happens right now is when somebody goes into a bank to open an account, it's up to the discretion of really the person behind the screen to determine if that document is authentic or not. And that is such a big deterrence for people from opening bank accounts. So what we want to see is using digital ID to authenticate documents, digitally certified documents or verified credentials and so on, to make sure that the individual knows that they can get the service if they show up with those verifiable documents. So we want to basically increase trust in the financial sector, and we want to make sure that the public knows that they can get a service when and if they show up at the financial institution with those documentation. The other important thing is we talked a lot about KYC, right? A lot of the banks, as part of the requirement from the National Bank, have to do KYCs. So two things happen. One is it costs them a lot of money. The research in Ethiopia is it takes about 2 to 3 weeks for a bank to verify that person is who they say they are. So what we suspect is a lot of times they're probably bypassing that requirement because there's a huge competition from the different banks to gain customers. So you know what that means, right? You have individuals who are not verified, who own accounts, and then from thereby we have some type of financial crimes that happen. So it's so important to have a digital ID system that can validate people for who they say they are, and then linking them to those documents to make them legitimate enough for them to be able to get services. Last but not least, having a digital bank account means access to credit, right? Microcredits are quite important. I was in Nairobi, turned out about a year ago, and my Uber driver was telling me that he doesn't have enough money to be able to fill gas, right? So what we've introduced in Ethiopia with something similar to M-Pesa called Teleber is introducing microloans to issue people small loans. And that's going to drive the economy even further. So it's such an important and key topic for us.
Thank you, Al. Since we are sitting under a banner that says Security and Privacy Initiative, we possibly cannot ignore some of the things that Jackie brought up, which were rightfully so, that we live in a very fast-changing, dynamic world. Elections can happen. You know, you're always 1 or 2 elections away from very bad things that might happen. As we think about security and privacy risks, which I think are not solely in the domain of ID, because we have new technologies coming up like facial recognition. Most of us came through airports. Most of us had to give biometrics, at least I did. So these risks are very real. And they are very different in different contexts. So I would like to ask Ramesh, you said that when you build MOSIP, you start from Jackie's point of view. What do you mean by that? How do you address some of the risks that Jackie brought up?
Thank you, Kanwal. So I think there are 2 words which we need to look at. One is trust and the other is risk. The world moves on trust. Without trust, actually nothing will work. We cannot collaborate and work with each other. No transactions, physical or digital, are possible without trust. But then in every transaction, people are also evaluating risk. Right? The eKYC process, for example, that a bank does is basically because they are trying to mitigate their risk. And that is what sets a high barrier for somebody to open a bank account. So there is always this risk at play. We've always been talking about institutional risk, and now finally the time has come where people are looking at the individual's risk. So when we build MOSIP, we make it a user-centric system. So we are worried about the privacy of their data, how it will be accessible, who can access it, who cannot access it, and is the access transparent? Is it with the user's permission and consent? Right? So we look at all these things. And as much as possible, everywhere, we have locked down all data so that even the administrator of a system cannot go in and look at the data. They are just holding somebody's data and facilitating some operation. They don't get access to the data, they cannot misuse it. Lock it down, because they don't need to see it, right? So it's on a need-to-know basis. And whenever there is a need-to-know basis, actually, let's say a bank says, I want this person's data, I want Ramesh's data so that I can open a bank account, then I should be involved in this transaction as an individual. Without me being involved in the transaction, we don't want a bank to talk to some other system and fetch data. So what we do is, as part of an authentication, there is a bank account opening transaction ID and my consent on what I am sharing, and that is recorded. And then based on that consent, my data is then decrypted. And it can only be decrypted when I provide the data, initiate the transaction. It gets decrypted and sent to the bank. And it's digitally signed so that the bank can trust the data. Right? So we are looking at trust as well as privacy and security of the user's data. Right? So, but while we do this, this is easy to do in an online way. People also want the same kind of assurance on who the individual is or who the relying party is, even in an offline world, because inclusion is a real challenge, right? Infrastructure is not available everywhere. So we bring that by using technologies such as wallets. And in the wallet also there are digitally signed credentials. The user decides to share their data. Selective disclosure principles are used on what they share and what not. And so the user is always in control. And in case the user doesn't have their own phone and their own wallet, we are facilitating multiple service providers who can step in. The user can choose which service provider they want. They can have that service provider host a cloud wallet. They can initiate a transaction either through an IVR or a USSD or a kiosk somewhere which is connected. They identify themselves, and over a secure network, they initiate this and then do the sharing. So this way, we are at any given point of time looking at security of the user's data. Nobody else gets to peek in because it's end-to-end encrypted. And anything that's shared is shared with the user's permission and with their consent by way of their involvement in the transaction. So this is the thing. So we keep getting requests all the time to say, hey, can we have a role-based access control which opens up the data, and can we run any reports? Sorry, we don't have that API in our system.
Cool. Thank you, Ramesh. So Jackie, I wanted to come back to you because I do agree with you on one aspect, which is when it comes to financial inclusion, are you really included if you have no money but an account? And that's a very interesting way to think about it, because by the traditional definition of inclusion, if you have an account, you're included. But if you have no money to deposit in the account, what should we call you then? So I think as we parse that definition a little bit, if we look at the economic progress of some countries, as digital payments have increased, we heard some numbers from Nehal, 6 billion transactions a month. We heard from Mithul this morning in one of the lightning talks that the cost of KYC, which used to be $5 per person, is now 9 cents or lower. So would you say that that is meaningful progress towards access, but we need to do more for health, financial health? Would that be something where there's an opportunity here?
Yeah, I think there's a lot of opportunity. I mean, just the number of transactions cannot tell you anything about financial inclusion unless we're treating it as an access problem. You just look at the UK. In the UK, the vast majority of transactions are digital. And yet, in the last 10 years, there are now thousands and thousands of food banks. These are places, for those of you who don't know, where families who can't afford to eat can go and pick up food that other people donate there. So does that seem like a country that's increasing financial inclusion, or does that seem like a country that's decreasing financial inclusion? I would say that financial inclusion is rapidly decreasing in the UK, yet digital transactions are as high as ever. So there's very little relationship between digital transactions and financial inclusion. I'm not arguing against any technology, but I think it's too easy to think of technology as the solution, when technology can only be one part of the solution, and it tends not to be the most important part. What we need to be thinking about is, how do we create more and better jobs? How do we have more jobs that are less precarious? And again, in this way, the West is actually going in a bad way, in that there's more and more precarious work in US and in the UK and in Europe, rather than less precarious work. Yep. So we have some big challenges I know. To address.
Yeah, I agree with you, but I think the gamut of what we are talking about is more macroeconomics when we talk about jobs and how much money people have and things like that. But I think even if we were to assume technology was a small solution, it can't solve everything, where I completely agree with you. And on that, Fahad, I wanted to come back to you. You mentioned many more use cases than inclusion. You, in the context of Morocco, it seems that the ID is becoming foundational to more things than just financial inclusion. Can you elaborate on that a little bit?
Yes, and this is what I wanted to tell you about the Moroccan initiative. And we have faced many challenges that are in relationship with identity, especially in the COVID crisis. The Moroccan government have faced two main challenges into the delivering of the social aids to the deprived and poor people. So two main challenges. The first one was a categorical one, which means that of targeting those people and identifying them. And the second one was a geographical one, which is to locate them territorially in order to send them those financial aids. So the government, through its watch committee, has been led to draw a distinction between two populations in order to deal with this challenge. The first one was the Ramedist people and the non-Ramedist people. And for information, Ramed is a national program that underpins a free medical coverage for the poorest people and for the deprived. So the first population was easy to locate, was easy to identify, simply because they would have an immatriculation and an access card. The second one, they were more difficult to access and more difficult to locate. So we dealt with that in a more traditional manners, and that increases the risk of exclusion and inclusion. So now the solution that we have conceived, so the idea was to design and implement a digital identity and the national population registry that will underpin efforts to transform the social safety nets by doing three main things: presenceless, paperless, and cashless transactions. And this NPR, which is the National Population Registry, will leverage in its core technologies the MOSIP infrastructure. I think my friend Ramesh here could detail this more. And each registrant is assigned the digital ID, a digital and a civil and a social ID that will serve as an interoperability link between all the information systems and the databases of those organisms that are responsible for those social aids. And through this IDCS, which is the Digital, Civil, and Social ID, the households can register to a unified social registry, which is acting as a one-stop shop for all the social aids that are public administration are responsible. So this unified social register will assign a score to households, and this score will be based on some socioeconomic demographic parameters, and that score will determine your eligibility, the eligibility of the household to take the financial aids or not. So all of these exchanges between the Unified Social Register, National Population Register, information that the citizen is given, they are performed through a national interoperability platform that the Digital Development Agency is conceiving. So the idea behind is that we'll move from a more siloed approach to a simplified way of working. So, which means that the user must make just a single request for those social aids programs, and in turn, the administration in charge should never require, let's say, additional information to that citizens, and should directly require it and demand it from partners' administrations through the interoperability platform. And this is the idea behind that. So, with regards to identity, to accompany all of these schemes, the Digital Development Agency and the General National Security Office, they have launched a trusted third-party national platform. So it offers organizations, whether private or public, and citizens, a dematerialized framework for verification services, leveraging the CNEE, which is the electronic national identity cards that people are holding. And this will be based on multi-factor authentications, such as OTP SMS, such as PIN codes, such as iris scan if the citizens is physically present into the administration to demand these aids. So the objective here is to have a stronger identity approved by a third party, a trusted party, having a level of confidence required to establish the link between two entities in the cyberspace.
So ultimately,
thank you.
Comes down to trust.
Yes, absolutely. Thank you.
Thank you, Fahad. And Al, a question for you. As many countries are now embarking on these large-scale digital ID programs, and some are being inspired by numbers. So, for example, I think in the case of India, it was 38% to some 80% financial inclusion. Is Ethiopia looking at learning from all these different implementations and absorbing some of the technologies in there? Can you name like a couple of things in FIDA that would meet that description?
Great. So thanks. So I think the Ethiopian ID program is sort of a latecomer, and I'm very glad that there have been a number of large examples, the Aadhaar in India being one of the clearly the largest program. So we've drawn a lot of lessons, lessons from our neighboring country in Kenya. We're taking lessons from India. And then all the different countries who may not necessarily have a digital ID, in effect, they do have their own similar systems. So in our country, we have recently actually passed a draft law that's actually going to Parliament and defines very clearly, includes clearly defined specifications of what we think the digital ID should do, more on the policy side, on the governance side, on the privacy side. But also when it comes to technology, we have decided that we're going to be going forward with a digital public good. So in our case, we're implementing MOSIP. We started developing and working with the MOSIP team about 3 years ago. So we're starting to ready to build a capacity in country. In fact, we made investments in MOSIP even before we set up the country programs because the learning curve and getting this buy-in from the government officials was going to take time. So we've done that work early, and we're getting to a point where we've now done a large number of pilot implementations as we get into a larger scale rollout.
Cool. Thank you, Al. So we have about 5 minutes left. So I want to make sure the audience gets heard too. So we've heard like a lot of things. We've heard different viewpoints. I would love to open this up to see if, who from the audience might have any questions. First hand I see gets it. Yep.
Okay, thank you very much. So I actually have a bunch of questions.
Now let's start with one. We gotta give something to everyone.
Sure. Oh, sure. Forgive me. I'm a journalist, so I have questions. I want to direct some of these questions to some of the panelists and some of what you've spoken about. I want to start with MOSIP. Sorry, I missed the name. Okay, cool. Because the first session we started out talking about data sharing and location and all that data sovereignty. I'm curious, right, for what you're implementing in African countries, how you managing all of that?
I think we provide the platform. The implementation is advised by the country with a set of experts, and the decisions taken by different countries are very different, right? They take their present situation, their needs, and then take a call. So there are countries who have decided to go with part cloud, part on-prem implementations. Some are very particular that they need to have it in their own data center. Irrespective of what the approach is, most of the processes, the technology processes involved are the same. The impact really is in the comfort that the country feels, whether they are in control of the system or not, and whether they have the data with them or not, right? And so through technology, we have made sure that they, at any given point of time, that they have their data access, and that data is protected from inadvertent access by third parties. So, but other than that, the very nature of our solution, it being open source, means that they can take charge of the solution itself. The software is not licensed from a third party, so they have continuity of their systems. So I think that goes a long way in giving them confidence.
Thank you, Ramesh. Anyone else? Up? Yep, go for it. Yes. You can take my mic.
Hi. So I had a question for Jackie. So you were saying every citizen should have money to at least digitize. I mean, at least money, right? But in India, it was not the case. India PMJDY scheme was brought in case to include the citizens. And free accounts were opened where zero balance accounts were open and given a debit card. You know, that actually motivated the people. So how do you see it with Africa? I mean, if they don't have money, but you want to include them, so should the regulators and other people not include them into the ecosystem is my query.
I think this comes back to our definition of what's financial inclusion, and I'm going to talk a little bit more about it and the definitions in my short talk, but I'm going to give away one quote, which is an auto rickshaw driver in India who was talking to me about using bank accounts, and he basically said, procedurally, it's not difficult to use a bank account. It's just much easier if you have some money. So you can have a bank account, but if you don't have any money to use, it's a useless tool. I guess that's my point, that financial inclusion, so access and access is important and it's necessary, but it's not on its own going to create financial inclusion.
Cool. Thank you, Jackie. And Al, you want
Yeah, I want to add something to what Ramesh said earlier. I think we got to be very careful and not, I'm going to go back to the DPG question. We have to be very careful not to assume that just because a product is labeled as a DPG, it is valuable. So it's very important, for example, looking at MOSIP, the reason that in our country that we've selected the product is because it is a product that we can locally customize, manage, and operate, right? So key point everybody should take, MOSIP is not a system, for example, that's running on the cloud, running by some organization. In this case, this is a digital public good that we've taken to our country. We customize it for our specific requirements, in running it and maintaining it, and hopefully contributing code back to the global community. So I just want to make sure that we don't lose focus on the big picture of the DPGs.
Cool. Thank you, Al. I would like to thank the panelists for engaging us for a good part of an hour, or almost an hour. Thank you very much, Jackie, Ramesh, Fahad, Al, and we look forward to Jackie's talk. I think that's the next one, right?